Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in the United Kingdom because there is even more bad news coming out. The wage data for November has now been published and it shows that wages are growing at more than double the rate of inflation. And that's coming at a time when unemployment is rising and job vacancies are falling. We've got a real risk here that the UK could be entering a period of stagflation where you have a stagnant economy but inflation at the same time. And that obviously represents a serious problem because if you don't have any growth but you've got rising prices, then it means people have less money at the end of the month and therefore everybody's standard of living goes down. This chart shows the year-on-year movement in average wages in the UK, excluding bonuses, over the past 12 months. And what this shows is that in December 23, wages were increasing at a rate of 6.2%. And at that point in time, inflation in the UK was 4%. However, over the following 8 months, there was a consistent reduction in wage growth increase. And by August, it was down to 4.9%. And that movement mirrored what was happening with inflation in the UK as the Bank of England targeted inflation to try to bring it back under control and get it down to its target rate of 2%. And you can see from this chart that in September, inflation actually fell to 1.7%. However, if we look at what's happened to wages over the past couple of months, you can see that in October, wage growth increased to 5.2% from the low of 4.9% in September. And the latest data for November show that wages have increased again to 5.6%. And this comes at a time when inflation has risen back above the target rate of 2%. The latest data that we've got for December shows that inflation is now sitting at 2.5%. And if we look at this chart, which shows the 12-month movement in real wages, so basically looking at the movement in wages but adjusting it for what's happening with inflation, you can see that the current increase in real wages of 3.4% is the fastest that's been seen in the UK for more than 3 years. If you look at the shape of this chart, it is a very steep upward curve. And that's concerning from the Bank of England's point of view because it indicates that wages are starting to get out of control. So the key question here are, why are wages rising so rapidly? Is this down to a shortage of labour? Is this a hangover from Brexit? The fact that a lot of people have now left the UK and the UK is struggling to be able to recruit the right sort of people. This chart shows the UK's unemployment rate over the past 12 months, and the latest data for November reveals that unemployment is now up to 4.4%, which is the highest level that's been seen in the last 12 months. And if we expand the scale of this chart to show the last 3 years, you can see that the current unemployment rate is actually the highest that the UK has seen at any time in the last 3 years. And this chart shows the flip side of the equation, the employment rate in the UK, and the latest data for November shows that the employment rate has fallen to 74.8%, from a high of 75% in August. And this chart, which is produced by the Office of National Statistics in the UK, showed the number of job vacancies dating back to 2005. And what this shows is that over the last 2.5 years, there's been a consistent and steady fall in the number of job vacancies from a high of 1.3 million in May 2022 to the current level of 812,000. So what that data is telling us is that the number of job vacancies currently in the UK is falling at a time when unemployment is rising and the percentage of people employed is falling. So the rise in wages isn't because there's a shortage of people. It's not like what's happening in Russia, whereby there's not enough people to fill all of the jobs, and so employers are having to offer higher and higher wages to attract people in. That isn't happening in the UK. There's actually a higher percentage of people unemployed currently. The number of jobs are going down. However, the employers who've got people in their jobs are offering higher wages. They're giving pay increases. And this is probably a legacy to the high inflation that the UK has seen over the past 2 years or so. We've seen a lot of people striking. There's been a lot of campaigning for higher wages. That's now feeding through into the economy. And this represents a problem for the Bank of England because they're trying to keep inflation under wraps. They want to keep it at or around 2%. But if wages keep rising at more than the rate of inflation, then that means that people will have more money, they'll spend more, demand will increase, and therefore inflation is likely to go back up. And that's going to have a big impact on what happens with interest rates. This chart shows the movement in the official rate of interest in the UK over the past 5 years. What this shows is that from an all-time low of 0.1% after the COVID-19 pandemic, the Bank of England increased interest rates on 14 consecutive occasions to a rate of 5.25% in August 2023. Now, as inflation started to come down to around the target level of 2%, the Bank of England reduced its interest rates in August 24 to 5% and then reduced the rate further to 4.75% in November. And at that stage, it was expected that the Bank of England would follow on with at least 3 more rate cuts in 2025, taking the official rate of interest down to 4%. However, what's going on at the moment with both inflation, which has started to creep up again, and wages is throwing a huge question mark over whether or not the Bank of England will reduce rates that many times. It's expected that on the 6th of February, the rate will come down to 4.5%. However, there's now a high degree of uncertainty as to whether or not the following 2 rate cuts will actually come through, unless inflation stays at or around that 2% target. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking a lot about the problems in the UK economy right now. If you've been following the channel, you'll know that GDP has fallen to basically 0% growth. So there's a big concern as to whether or not the UK will hit its year-end target. And if it doesn't, if it's now going potentially into a period where GDP could be falling, there's a real risk that the UK could fall into recession during 2025. And in addition to that, there are also now problems for the UK government in terms of funding its spending plans. It doesn't have enough money. There's a potential black hole of £30 billion sitting in the economy right now as a result of being too optimistic with the forecasts for GDP growth. The UK government is now having to take on more debt to fund its spending, and the cost of that debt has risen rapidly over the past few months as a result of fund managers exiting from UK government bonds, which has forced down the price and the yield has therefore gone up. So the cost of UK government debt is now higher than it was in the original budget. So there are a lot of problems that are brewing. And in today's video, we've seen that wages are now rising in real terms at the fastest rate for more than 3 years in the UK. And that represents a problem because that movement in wages means that the Bank of England might not reduce interest rates as rapidly as everybody expected. And the high level of interest rates at the moment is deterring companies and people from taking on more borrowing. So that's reducing the amount of investment in the UK economy and therefore will reduce the amount of growth. And this comes at a time when GDP is already flatlining. So all of this is an absolute nightmare for both the UK government and the Bank of England. And it will be really fascinating to see what the year-end figures for December show, because the data that we've seen so far for the year-end isn't looking very good. The UK didn't have a strong finish to the year. So if we continue to see wages rising, unemployment rising, vacancies falling at the same time as GDP is flatlining and government borrowing costs are going up, it means that the UK is facing really strong headwinds going into 2025, and the UK economy is under serious threat right now. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.